Well, looking at the NASDAQ 100 here, the QQQ, as you can see, for the first time since the start of 2023, this rising uptrend support has been broken. Again, as you can see right here, 2023 January, and then mid to late March, and you can see in August. So you can see traders been relying on this uptrend support this entire year. This is the first time since the start of this year we're now breaking below this rising uptrend support. On top of that, I think a lot of people are looking at this as a major topping signal right here, as you can see with the left shoulder and right shoulder, and we're just right on the neckline as of today. As you can see right here, we haven't broken below the neckline yet, but we're just barely hanging on to that neckline. As you can see here, prior resistance, that is the neckline right here. That's the August low coinciding with my midterm moving average. You see that blue dotted moving average right there, right? And with the down gap just last week broken below the midterm, keep in mind that midterm moving average did have pretty impressive resume, because once that midterm moving average was reclaimed here around late January on the Qs, we retested in mid to late March. And then you can see ever since that midterm moving average was retested, this market thrived for pretty much, as you can see here, April, May, June, July, August, for about 5 straight months. And when we did see that pullback for the first time in 5 months, pretty sizable pullback there was that midterm moving average. So definitely that midterm moving at the blue dotted moving average there does carry an impressive resume until just last week. As you can see, that midterm, it is no longer supporting the buyers. Bears have worked really hard here to reprogram that midterm moving average, as you can see right here, because the price is now below the midterm. And even with a little bit of green candle yesterday, that midterm is now supporting the sellers. Yet again, we did see another down gap this morning. Look at how many down gaps bears are working. We got the down gap here. We got one here. So we got 4 down gaps working on the Qs, with another down gap from this morning, which is still open as of today. And we're just barely hanging on to the neckline right here. We're still below the midterm moving average and the rising uptrend support. So the biggest question is this market ready to dive heavily and punish all the late coming buyers in this vicinity right here? If anybody bought in this vicinity in the last, pretty much during the summer months, they are selling in panic last couple days, or they're underwater at this point. Is the market ready to really materialize? Because bears been you know what I'm saying, they've been cultivating this topping pattern. This topping pattern, a lot of people are going to look at that as very scary topping pattern, because as you can see in 2022, see that right here, right? And that this was a little bit more ugly a neckline, but you can look at that. This is a neckline. You can see there was a lot of up and down shenanigans happening in this vicinity. You see that it's never easy when especially when you're dealing with sort of a topping pattern there. It's never, you can see it pops back up, it comes back down, pops back up, it comes back down. Looks like seemingly it's gonna break down, but it pops right back up one more time. So in this vicinity, the market is, as this market starts to prepare what it wants to do on this neckline, right? And the scale of this, head and shoulder formation is much narrower than the 2022, 2022, which was much wider. So there's gonna be shenanigans here in this neckline area. I don't think it's gonna be how what we witnessed during 2022, but we're gonna have a lot of head fakes, a lot of shenanigans, up and down moves. It's gonna fake a lot of people out upside or to the downside, bulls or bears, because this is a level. There's gonna be a lot of speculating bets are gonna come about. There's gonna be a lot of longs thinking that this is the head fake, this is a scare tactic, this is gonna trap the longs and trap the shorts, right? Trapping the longs because they're getting stopped out, trapping the shorts because a lot of shorts are gonna start adding into the shorts, buying puts and whatnot, right? And so there are gonna be people who wanna buy going to the upside, and they're gonna be highly emotional. Why? Because these people are very, very short to micro term, meaning if there's a big micro term pop, they're gonna jump in heavily. That's where you might see some huge upside move, and the next day we see huge downside move. Why? Because these short-term, micro-term traders, very emotional beings. What's gonna happen is they're gonna get extremely elated and excited and in ecstasy when the market goes up, but they will be quickly exiting as soon as we see any sort of volatilities, right? That's why in a key level, you will see these volatilities. That's 355 right here, ladies and gentlemen. So I reckon in this vicinity, there's going to be a lot of up and down shenanigan head fakes. So you really have to tread carefully. I wouldn't come to a full conclusion. However, I do want to mention that in the short to micro to mid-term of things, for sure, short to micro term, because we're below the short micro term moving average there, short term moving average there, and mid term moving average there. So benefit of the doubt goes to sellers, at least short to mid term or so, until some of those moving averages get reclaimed. How this market has done before, as you can see here, short term, micro term, mid term reclaim, short term, micro term, mid term reclaim, right? So that's what bulls are looking for. So sometimes it's kind of good to be patient and sort of wait until we may see some of those signals come about. However, if this thing really started dropping here again, like I said, we got this area without seemingly any sort of supported areas here. So this could be a tricky level. Either this market is going to come straight down, but more often than not, there's going to be a lot of head fake shenanigans and mind games in this vicinity here. As I look at my oscillator here, oscillator is oversold on the Qs, very similar to what we saw in August and the end of March and January. So keep in mind though, when you look at this oscillator, it might be very, very easy to conclude that, oh my gosh, that this looks like this market is visually, that's what it looks like. But that is not going to be easy to just forecast that. What's going to happen is the market is going to have its up and downs. This oscillator, because again, keep in mind, this is a daily chart. This oscillator could kind of move sideways or have a little whipsawing action, whatever. Or this oscillator could even take another week or so, because you can see we could even do this bullish divergence right here, lower lows, lower lows on the price action. Right there, you see that lower lows. And then higher lows. What happened was when we did see that oscillator hitting that oversold, we did see 2 days or 1, 2, 3 days of bounce, and then we rolled over, made new lows, but then oscillator was elevated, made a bullish divergence. That's also the possibility. So a whole lot of things can happen in this vicinity. I think this is a level where I wouldn't get easily triggered, because market is master at this. It's gonna trigger you, it's gonna fake you out very quickly. Best way to kind of survive and navigate this market is not focus on so much on a short term, micro term, day-to-day fluctuation, but just waiting for the signal to kind of come about, and then allow this market to have its shenanigans, have its up and downs. Don't choke your positions to death. Do not micromanage, right? Do not just trying to overanalyze everything, because when the market gets into a highly emotional state, there's nothing to analyze about on a day-to-day basis. Just you gotta allow the market to settle down.